Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. How are you doing? It is Monday, the 9th. Camera seems a little bit off to me. I repositioned it a little bit, and I think that I ended up with the camera a little bit too far over here. But that's okay. We'll deal with that another time. Let's come over to the charts and see what we got going on here. And in the treasuries, we saw some selling into the close on Friday and then some overnight weakness as well. But a pretty strong recovery rally coming in here off of the open. I have to say this movement seems a little, what do I say, like exaggerated. Like, I think that what we've got going on right now is everybody is panicking and they want to go short the treasuries. And I really don't think I see the need for the treasuries to be like aggressively pushing down at the moment. The CPI is likely to be in line with expectations on Wednesday, and the estimates are coming out like spot 2, spot 3. So that should be further confirmation that inflation is maybe getting better. But so you got that, and then in the ES also moving lower. I'd say that the move lower in ES is a little bit more significant, but man, I mean this whole thing here was some of this stuff is just crazy, right? What was it? It was the 6th, right? Okay, no, Thursday was the really bad day where it was like 6%. Holy crap. Okay. Oil is opening the week a little bit lower here. Looks like I need to roll over. Do I need to roll over? No. I'm just going to right click on this and reload all historical data. All right. That don't look right. There we go. Okay. So, well, no, maybe it's not. Okay. But oil down a little bit, but within the range. Natural gas is coming off of its highest levels, though. Gold and silver continue to be pressured, although not, well, silver just take another plunge lower. Geez. And Kappa looking not so hot. Then we're going to come over here. Oh, yeah, I don't need that open. I was, well, we'll talk about it a little bit later. Bitcoin taking a beating over the weekend as I kind of warned to the Patreon supporters. We are now testing levels 3250, and Michael Saylor said something that like at 21K or something like that he would be in trouble. But I think he was saying that he can always add more collateral and that they can't really force his hand. But with the drubbing that tech is taking, he's got to be, I think that it's really more the company goes under before that, right? So, and then you've got the dollar, which continues to be strong, although it is pulling back into the 103.5 area. So that's what we got. Peace on Earth. Good morning. How are you doing? Panic? Plan for the day? Panic? I hope not. I don't know. So for me personally, I think my plan is probably going to be a little bit more hands off today. I'm not feeling up to my best, to be honest with you. Like, I think my allergies are flaring up or whatever, because I kind of woke up with a little bit of a sore throat and a runny nose and stuff. So it might be allergies for me. Plus, I had to deal with some all sorts of stuff. I have a little leak in my basement. Nothing too bad, but I did have to get a fan and everything to clear it out. So that was a little dramatic. And If I mysteriously die, it's not because. Why would you say something like that, Brad? Did you come across something the government didn't want you to see? I'm a little concerned now. A little concerned. I'm gonna move this camera's like when I'm looking at it, it's not looking straight at me, and it bothers the heck out of me. What else? What else I got going on here? Oh yeah, and I know, I had some trouble last week, but look, they're getting they're pushing up pretty strongly right now. Do you think that they'll make it back to 3%? I wonder. Anyway, so Peace on Earth is asking, does anyone trade mic'd up or communicate with other traders or go it lone wolf style? So if you're going to do something like that, I would recommend that you do it in small groups of people that where you've all made the agreement that you're going to trade together and that you kind of have the same general strategy, right? Because speaking with another person over voice can be incredibly distracting. A lot of people just find listening to a news squawk like this can be distracting, right? But I tell you what, like we've tried a few times in Discord to we'll let everybody talk or not, we'll let everybody talk, but like try and get people talking in the Discord chat. And it never works because it's just too distracting. It's just too distracting. Oh, you're talking about an Elon Musk tweet? I spent all weekend cleaning up a huge tree that fell. Ooh, that sucks, dude. I'm sorry. How, by the way, so you said an Elon Musk tweet, so let's come in here. What do we got? Yeah, fooled by randomness needs no revision. Day traders lose all the money made in meme stock era. Yeah. Yep. Unless they had gotten out or something. So something really interesting is happening in the market here today. Why does my ear itch so bad? You don't have any Bitcoin? I tell you what, it's kind of nice for the crypto sphere to kind of hype down a little bit. Yeah. I have to wonder what happens if Bitcoin gets back to the previous cycle's highs. What if they fail the previous cycle's highs? That could be such a devastating hit to Bitcoin sentiment. I really wonder. You think that they've got more coming up here? This is a pretty strong bull run in the treasury. I don't know if I can confidently hit into 3.15. But this trend is not stopping. Anyways, oh yeah. I was looking to see what's the Elon Musk tweet. People talking about Luna. No, I don't see the Elon Musk tweet yet. Oh, there are no angels in war. It's the last tweet that I see from him. Is it worth mining if it tanks more? I don't know. So here's my concern in Bitcoin is that, hold on. Hey, when I do that, I'm like, here's the thing. And then I pause for a second, blow my nose, rub my eyes, take a drink. Okay. My concern is that the regulation is coming into the cryptocurrency sphere. And I think at this point, one really has to wonder how much of Bitcoin's price is really just not even just speculative fervor, but people pumping it up for scams, And I feel like that this last cycle in Bitcoin, that was like all I could see. It was so incredibly frustrating for me to watch all this nonsense going on. Hey, look, the treasury is coming off there, but the 10-year is not. ZN's coming off there, but the 10-year yield isn't really shifting back. I think that it's because the 30-year isn't pulling back as much. because we're still getting steepening. Anyways, so it's just, and then if you've got regulation coming in, and really like Bitcoin right now is just following the NASDAQ, but regulation is going to come in. They hired like 20 more people to investigate and stuff. Yeah, I don't think that can go on for very long, you know? So that could really hamper Bitcoin sentiment. And then at that point, I think that a lot of theories and so forth that people were kind of basing their entire Bitcoin thesis on kind of start to come into question, right? Like certainly this idea that Bitcoin becomes a global currency, I think is like seriously in question right now. It can't replace the dollar. It's just simply incapable of doing it with the technology. And I think more and more people are starting to realize this, you know? Like the whole ApeCoin fiasco, that's I think the ultimate proof that the technology can't do what they want it to do, right? And and then what happens if they go below the previous cycle's high, right? uh, a lot of people are invested in Bitcoin on the thesis that they can invest in Bitcoin in the same way that you can invest in your retirement funds with stocks, right? That you can put all your money in there, and on average, you're going to get a 10% gain, and that will just go on forever. Well, I kind of question if that's really true with index funds, but the instant that Bitcoin has a bull market that like comes up short of what they think it should, that's gonna like really hamper sentiment over there, right? And regulation is the sort of thing that could prevent them from reaching a new all-time high, right? So I don't know if this cycle was the all-time high, but this cycle definitely did something to sentiment. Like the people that are in Bitcoin, they're in it, and everybody else doesn't want anything to do with it. So there's some real interesting questions about Bitcoin's long-term efficacy and what's going to happen next over there. An overlay of the way Ponzi schemes build versus the way Bitcoin is gonna, well, Brannigan Barrett pointing out that 10-year at 3.17 going to be an ugly day in the financial markets. That was before it came back significantly, though. Well, we are getting a pullback, and enough of a pullback here in the 10-year that I have to question. Yeah, I have to question that uptrend. It was a strong uptrend, relatively speaking, but I don't know if that's enough to suggest a large meta order that we can really rely on. Now, is it worth mining if it tanks more? I think so. It's not to the price levels where I'm like outright buying it. There's still a bit of froth to come out. But that's kind of another thing that I look at here is that in past bear markets in Bitcoin, it comes back further. Doesn't seem like it's there. You're all in. Of course you're all in. You've already lost like 60%. You're to the point where I am with Zillow, where it's like it's so little that even if it goes back to zero, it doesn't matter to me anymore. So I might as well just keep it. What do you usually trade? Well, so we watch the equity indexes too, but I don't take live trades on the equity indexes. It's a little bit too rich for me, and I just don't really have as solid and defined of an edge in the equity indexes as I do in the treasuries. But I focus primarily on 10-year micro futures. That gives me, it's not a ton of risk. You got to realize, guys, day trading, if you're new, most day traders fail. Okay. And day trading is just as hard for me as it is for everybody else. I know a lot of things about order flow and the empirical proven properties of financial markets, quant kind of stuff that most day traders have never heard of before. You're not going to hear very many people on the internet talking about this sort of stuff. And even with all of that, I still have a hard time being successful in futures. So yeah, what does that mean? It's super hard, So the amount of risk that we take on is very, very tiny. And the 10-year allows me to minimize that risk. You think we get a VWAP bounce here in the 10-year? It does kind of look like that's what it's doing, but you see that they bounced back up a little bit and now they're coming back down to the bottom of this range already. I'm thinking that what happened was there was a meta order buy off of the open that has already fizzled out, and it is now trying to rebalance around that, around that VWAP. Like that just seems like the spot that it's going to do it. So 117.22 is like seller's break even point. So oh man, what happened here? I got like a scratch on the back of my neck. I wonder if that was from the baby. My toddler is violent. I think that he's a little autistic because I can recall some other autistic children being violent towards other children, but he probably would never do that to other people. But to us, he will scratch me, or he will try and come behind me and squeeze my neck as hard as possible and choke me. Anyways, it was, so we're balancing back out here at 22.5. That means that 22.5 could be a place that we eventually want to trade, but maybe not now, right? We might want to wait a good 30 minutes and just kind of let it do its thing at that point. But we're early enough in the session still that you might see continued fights. Like you might see the day traders, the locals, ping it back and forth here and maybe come to some conclusion. Could be that this buyer is not done and he's fooling us here. But at the moment, I kind of see a price that if I wanted to go long at 23, I think that price would be okay. But I don't think that the timing is right. I don't think that the book was disrupted that much by the up move, but it's a pretty consistent up move starting from about 5:50 my time here. So that is one that we kind of got to be a little bit careful about. And not only that, but it is a counter trend on against the daily time frame, right? It's a buy. So that's another thing that means that we have to be a little bit careful. At the very least, if I'm going to take it here in the micros, I think that I'd have to be taking the fill at 3.16 rather than hitting into a 3155. Oh, you know what? I don't have my news squawk turned on. That might help a little bit. We don't, by the way, so Bank of England Saunders speaks at the top of the hour. And we also, don't we have, I don't have it on my calendar here, but don't we have another Fed speaker? Bostic. Ah, yes. Fed's Bostic speaks tentative 550 on where? Okay. So he's not speaking yet, but that could happen at any moment, I guess. Let's see here. If I come over to the Forex Factory calendar, is that any different? No, they don't have him on here. Okay, so be careful. Be careful. Yes, it's well it is sorry, what is his name? Bank of England's Saunders will be speaking. Let's see if I can come in here and see where he's speaking. Yeah, I don't have it on. I don't have it on Forex Factory, so maybe that's on television too. I don't know. I don't know. We're just gonna have to be on our toes, I think. Well, that was another little push up higher there in the 5-year. Maybe they really are just gonna take it from here. This is from the Wall Street Journal about hedge funds. Some employees from billionaire hedge fund manager Steve Cohen's firm, Point72 Asset Management, are moonlighting in crucial roles for the New York Mets. Many are tasked with improving data analysis and technology. Oh, that's interesting. That's actually really interesting. Man, I'm surprised that they get back up there that quickly. Well, they might have to do it without me. They might have to do it without me. I'm just feeling like really. Yeah, that was a little weird. Somebody wants the fill there at 151. Maybe they just had bought. Maybe they had just sold out here and they're trying to get out of their position. That kind of seems what that might be. Mohammed A. L. Ryan. It seems rather striking how willing some Fed officials are to share their estimates of the neutral rate. In the best of times, it's hard to specify what has often seemed to be a time-variant concept with distinct cyclical and secular dynamics. It's even harder in today's ... And then I don't get the rest. We have to wait to see what the rest of Mohammed L. Ryan's comment here is. How come I don't have him? Open a new window. I don't have him on my list of traders, but he should be. Add or remove from list. He is in the traders list. So I don't know why he's not showing up over there, but he is over there. Oh, I see. That was just a different color. He's not in the list. Traders. There we go. Anyways, so he was saying it's even harder in today's uncertain economy and unsettled financial system. While I understand and appreciate the desire for appropriate specification and accuracy, the line that separates these two notions from over specification and spurious accuracy is a delicate one in this world of ours. Well, I think the reason that they're saying it is I don't think, Mohammed, I don't think that they're doing this because they really think that they know what the neutral rate is. I think that they're saying this because they're pretty confident that whatever the rate is now, it's below the neutral rate, right? What they're trying to point out here is that what the Federal Reserve is doing at the moment is only tightening on a relative basis, because current Fed policy was injecting money into the economy with unusually low interest rates. So if we go back to a neutral rate, that shouldn't guarantee or necessitate a recession. Just going to a neutral rate. If just going to a neutral rate causes a recession, then we're in an awful spot. Although if we are in a recession right now, and it is possible that we're in a recession like at this very moment, if we are in a recession right now, I think that you would have to say that it wasn't actually caused by the Federal Reserve, that it was caused by the Ukraine invasion, because we already got those GDP numbers. The U.S. exports has just completely crashed, right? Okay, so kind of missed an opportunity there for sure. But we did kind of pass on it, right? I did point out, like, well, I would rather sell 16. Wouldn't have gotten 316. Could have gotten 3155. Could have gone 3155, but I said the timing's probably not right. So now it may yet come back again. We're not that far away from it, but it does look like that we maybe missed a small opportunity there. US doesn't export anything in the first place. Well, it does. This is the big problem, man. I don't think that I hear enough about it, and it makes me kind of suspicious. US exports completely collapsed last quarter. How does that happen? The policies that we have in place are killing US exports. It's just so funny. Everybody complains about, well, not complains, but they're all warning about the day that the dollar goes defunct. You know what it is? I hesitate to say this because I know that it's kind of like a controversial thing to say, but I think that what people do is they come in and they learn about monetary policy and inflation, right? And when you look at inflation over the long run, inflation is good for investors with assets, and it's bad for people at the bottom that are buying goods that are constantly increasing in value, right? So I think that a lot of people come in and they look at it and they say, this is a policy that is bad for me. It should change. What they aren't seeing is that a certain amount of inflation is necessary in order to create an incentive for investment. So like none of this financial system really works, continues on without some degree of inflation, right? So it's kind of a necessary evil, and people come in and so that's the thing that they're concerned about is inflation, and so they're always on the lookout to criticize the Federal Reserve because the Federal Reserve creates inflation. And so the ultimate big bad scenario from inflation is that we get hyperinflation and the dollar collapses and it's no longer the world's preeminent currency, right? So they always jump to that conclusion. But right now, the dollar is really strong. It's at 103, right? US exports collapse. That means that there's more dollars here at home than are coming out abroad, right? Nobody's selling dollars. It's just so right now the problem is not a weak dollar. The problem is a strong dollar. And it's just so funny to see everybody out there talking about how our dollar is becoming worth less and then seeing the dollar index high. You know, and it just keeps going. Like it's been this whole past week. I mean, it seems like it would be appropriate for there to be a significant pullback in the dollar, no? But it hasn't been happening. Well, that last little push there in the 10-year did have a little bit of volume behind it, but they didn't get very far. So that kind of suggests to me that we were right earlier about it maybe not being the appropriate time yet. There does still appear to be some disruption in the order book below us, which is causing us to kind of fall back into that hole. Okay, so I'm getting I see a tweet from News Squad. Slight minutia in Bostic's comments on Bloomberg, where he sees the Fed hiking 50 basis points 2 or 3 times, then assessing how the economy responds, indicative of a pause on rates in September/November, while Powell said they would see at the time whether to hike above neutral. No mention about a pause. Okay, so what this is here's the thing. Bostic was one of the hawks, right? Bostic was one of the people that made the market say, what if they raise interest rates 75 basis points? So that tweet from News Squawk, I would rate as, not as hawkish as market expects. So that could be a reason to be seeing the treasuries rallying here, although they aren't rallying in a way that suggests that they're reacting to news headlines exactly. So, and I guess we are still coming up on the Bank of England's speaker here. So we do have a little bit of a hole behind us. The timing is a little bit better here. Would be better if it was like 15 minutes from now, but all US produce, well, for one thing, we produce a lot of food over here, NASDAQ killer, right? People forget that even though there's a lot of food produced in Ukraine, it might not be as disruptive in the United States because farmers can just increase their output over here. Like, we're not even close to maximizing food production in the United States. Because if we did, food would be too cheap and nobody would make money from it. So, well, they're not backing off them highs much at all, if at all. We definitely should have just taken it. I do see it like that 118 area is probably a pretty good upside target. Interesting. But it is still, you can see that even though they're pushing further up, it's becoming more choppy now because the books is still disrupted. So we got to be really careful about taking longs here. I don't think, uh, that kind of makes you feel like, it's just going to keep going. I want to hit into it. But under my framework, no, I think that we should be patient and wait for a more advantageous price because the book is kind of suggesting that we would get a better price. In fact, there's even a possibility. I wonder that they could come back down and break out the bottom side of this, and that could maybe even change sentiment. Because I don't know if this buying is really like a bigger thing. It could just be traders trading, and if that's the case, then them, breaking lower lows could change the sentiment enough to make us push down. So what I'm thinking right now. Oh yeah, I forgot. Today is AMC earnings. Tomorrow is Peloton and Coinbase earnings. Oh man. Well, they didn't break the bottom side there, but they snapped back to 26 pretty quick. Yeah. Okay. And then they're back down to that low spot. I think I'm reading the book correctly here. I'm just not getting as deep of a pullback as I want, I guess. Like that push right there makes me feel like, oh yeah, actually, why not sell 14? We're getting the comments from Bank of England speaker. Hmm. Inflation and key measures of longer term inflation expectations are uncomfortably high. The strength of external costs is eroding real incomes and is likely to cap real spending. Okay, so Saunders is saying that the inflation is starting to cause stagflation, is starting to have stagflationary effects, is what he's basically saying. Tries to delay healthy correction until they combine it into a crash. Well, um, I think that might be so. So here's the thing: is that you can't look at the alternate history of what would have happened without the Federal Reserve. And so I suppose that people could disagree with it, but I would suggest that if it was not for the Federal Reserve, that there would have been a complete collapse in the US economy and that we would still be in the middle of a depression. So I think that a lot of people blame the Federal Reserve for, like monetary crises, but I think that all of the evidence suggests that the Federal Reserve is effective at blunting the impact of both manias and um, crashes. Although in this case, they certainly exacerbated the mania, didn't they? I think that this is. I think that in the past, that it's kind of been all about what's like the appropriate action from the Federal Reserve in certain situations and how do you manage the risk of it all. And in this case maybe they were too risk adverse about it, but in the now what I think we're seeing is that now the Federal Reserve kind of has to figure out um degree, right? Okay, when we do need to stimulate the economy, how much do we actually need to stimulate the economy? Because this time it was too much. And I think that some of the most recent quantitative research gives some really good suggestions for how we can potentially calculate that. So, well, they're giving us 14 again. This it still looks a little shaky here. The problem is not the crash. I mean, I'm telling ya, I don't think that y'all would be very happy about the Federal Reserve if we were in a depression right now, right? It's just, with them being the ones that make the decision, you can never win that battle, right? Uh, there will always be a way for people to criticize what the Federal Reserve is doing, even if they're doing a good job. What's wrong with crashes? Well, because crashes can be self-perpetuating, right? You don't want to have a situation like the Great Depression, right? Because the problem in the Great Depression was that they needed to loosen the monetary controls and they didn't. And so the market just stayed in doldrums for an extended period of time and still until they realized how to use monetary policy to stimulate the economy. their good job is lagging by a couple of, oh, I don't think that it's lagging by a couple of years, right? And in this one instance, they were behind by about 6 months because they were too risk adverse about um, additional COVID waves. That's what it really comes down to, is that they probably should have started tightening in the summer of 2021, and they didn't because they were concerned about the Omicron wave, right? So if they had done that, they could have raised rates more gradually. Things wouldn't be as dire looking in the economy. Okay. It's a small mistake. That's the thing that I find so weird about this whole situation is the market is reacting so adversely to something that, uh, from where I sit, seems kind of trivial. But there was so much speculative fervor in the market. I think that what you're really seeing here isn't so much that the economy is like in serious trouble, so much as it is that the markets aren't used to any kind of monetary tightening. They've never, it's been such a long time since we've experienced it. And then we have this like excessive options hedging activity and so forth, moving the markets around. And then on top of that, you have a retail trader that is behaving very differently from the historical past, right? It used to be that the retail traders would be selling at the bottom, and right now it's the opposite. It's the hedge funds all seem to be panicked, and the retail traders are holding steady and are just hodling, right? So no, we should just remember that the action that we're seeing may not be indicative of quote unquote value, right? This is a really disorganized volume profile here between like 23 and 27 different times. Yeah, but again, like if the Federal Reserve hadn't done anything this whole time, right? I think that some of y'all like it's a reasonable, it's a very reasonable thing to say the Federal Reserve made a policy mistake last year and should have started tightening earlier and shouldn't have been as dismissive about the inflation and supply disruptions. Okay. But some of you are saying like the Federal Reserve shouldn't even be around. And I'm just telling you, if the Federal Reserve wasn't even a thing, we'd be in a depression. We'd be in a depression. That's not like the true value, where we should be, or anything like that. That's just bad monetary policy making an economic crisis worse. And here's where I think that where I think that people get things wrong, right? And this is why this is the central theme of this channel that we talk about over and over and over and over again. The market is not informationally efficient. There are a lot of people out there that think that the market is perfectly efficient at doing everything and that we should just always rely on the free market to get things done. But a monetary policy is not something that the free market can do effectively. If it's done in the free market, then it will just always be an oppressive force and it will hold back growth. You don't need a depression to kill off zombie companies. All you need is a usual recession. No, I don't know if that's true that China is 50 years ahead in AI. What? Here's the thing. If the Federal Reserve didn't exist, like, how do you get out of a financial crisis? I don't think that people really understand what the alternative here is, right? If you want to go back to the economy of the mid 1800s, I can go back and show you what that's like before the Federal Reserve existed. But I don't think that you're going to enjoy being there. Like, we're having, look, a lot of froth has come out of the markets, man. A lot of froth has come out of the markets. That's, I think, kind of the alarming thing in this situation is that what I've seen is the froth came out. The froth came out, and there's maybe lower to go. Froth came out, but there's maybe lower to go. You know, I haven't seen like the really truly strong ones really well. We're starting to see it in some of the big techs, right? The solid companies starting to take the hit now too. So that says to me that if like we're really truly in a dire economic situation, then we could still go much, much lower. And if we're headed for a financial crisis, then it's going to be a 50 to 80% decline kind of financial crisis. Okay, let's see here. Yahoo Finance tweets Goldman Sachs reiterates its 35% probability call on the U.S. entering a recession. Okay, well, so there goes that one. They think that everybody's overreacting, I suppose. Because like really, to in order to justify the kind of market action that we were seeing last week, I think that you have to be taking the position that we're headed for a financial crisis. Yeah. Anyways, I think that on China, that's another one of those things where we don't have the full picture. So how can we say, you know, China exaggerates where they're really at. But you just got to remember that the market is not informationally efficient. So the primary indicator that you would be looking at to determine where the economy is at based on all available information, which is the current price of the S&P 500 futures, it's not an accurate reflection of what is actually going on underneath. So if that's the only piece of information that you have, then you're just going to make wrong conclusions over and over again. Well, it seems like they came back there at 14.5. The micros moved across that 5-tick range quite quickly. This is an interesting bull run. It is very different from what you'd usually get. They got to the point where they were starting to feel the impact of their trades, and they continued to push. And it's just going back and forth in fits and starts. Anyways, I don't know. I may be reading the disagreement as more extreme here than it is, but yeah, Federal Reserve should have been raising interest rates like at the end of last summer when we were talking about it, right? They were overly cautious about Omicron is really what it was. Street tweets Bitcoin is down 50% in the last 6 months. By the way, here this morning, all we've seen is Bitcoin just continue to decline. Natural gas is taking a hit as well, although oil looks like it's recovering. S&P 500 pointed up for the time being. I suppose we could see a recovery rally in the S&P 500 Are we above 40.50? Oh no, it's 41.50 is the key level that I'm interested in. Yeah. For fun here in the MES, let's come in and put like 4 clicks. Okay. See what happens there. But they appear to be trending up nicely. In the treasury, one kind of has to wonder if you're catching 15.5 if there's not been a reversal in, yeah, if there hasn't been a reversal in the trend, if we get back up there. But the volume profile is starting to define itself a little bit more clearly at 25.5. In fact, the 10-year kind of suggesting to me that they can't get sells below 25.5. Can they touch 25? Oh, there we go. I did get my fills in the ES, but of course it immediately comes back. It was probably a very poorly timed entry based on the market rotations that we're seeing right now. Daily FX team retweets James Stanley. BTC is pretty nasty, a little trickier than the Ethereum chart, in my opinion, mainly because a breach of current support goes into the zone around 30K that held for 6 months last year. Lots of false breaks there. Could be a tricky zone to hold through. Right. So Bitcoin is down, but it's not down to the lowest levels here, but it sure looks like a man. When you look at the Bitcoin price chart, it's really like, whew, they're the chartists are not going to be happy, right? What's with this bid at 3.149? Maybe some signs here. Well, they took them. I was thinking about hitting into, oh man, I should have. Look at that. Oh, I should have hit him. That's frustrating. Tobias, how are you doing this morning? Oh, by the way, that reminds me. Now we're coming up to the E-mini. I do have a new video coming out today. Now we're a little bit more sparse today, but I've got we had that Daniel Inskeep video, so I made a video about that. That if you're doing any kind of algorithmic trading, I think you will find incredibly useful. So don't forget to check that out after the stream today. Man, that's frustrating to me. Well, it may as of yet turn around. I mean, if I really want to fade the trend and they're going to sell this again, that now is the time right there. But I just like those opportunities where somebody puts a limit order out and you have the chance to bury them. But look, there's another one at 14.8. It seems though that the market orders are more than willing to oblige. So here they are at 25.5 again. And it continues to kind of bid there at 25.5. 30-year not is coming back as much though. Seeing gold trying to make a recovery here. You think maybe gold could get back to 1900 this week? Well, the treasuries would have to chill TF out for that to happen for sure. Well, see, for the longest time, the price has been 3.14 is the bid that I keep getting, and I don't really like that price. This has happened to me too many times lately, though. I mean, I guess this situation is kind of reinforcing my hesitancy at these prices because it hasn't really gone anywhere in the last like 45 minutes, right? But there's been too many times where I really wanted to go a certain direction and it just went without me, right? So I'm really feeling that FOMO at the moment. Certainly would have been happy if I had sold the 15. I would probably be waiting for it to go a little bit further, but you know, I could take it off right here and be okay. Hit into 14. You're looking to go long on oil? I could potentially see it. Yeah. I can potentially see it. So we are getting more volume in here again in the treasury, and it does appear to be the market volume does appear to be to the upside. Market appears the bids appear to be a little bit more stable. Oh, we're getting a level break set up here now. Well, let's see. There's orders hitting into 28.5 as a new high in the 10-year. Especially if it breaks 108. 107.4 right here on in terms of oscillations looks great for oil. We'll see. That was a lot at 28. 4K traded there. Let's see if they do it again. There's definitely orders willing to hit 28.5. But that 28 is being flaky. Should we say we shouldn't say flaky? It looks a little. Okay, this is back to 600. Or no, I'm worried about this price becoming the high volume node here. it's giving a few signs that it could maybe do it. But that often happens when they're kind of setting up for a level break. So could, and they're all kind of lined up here. Like we should reset things so we can see here. Still got a good target above us at 118 even, right? In the 6J. Yeah, okay. It looks like the treasures are going more on their own. Okay. So they're willing to hit at 28.5, but stacked a little bit. 5-year goes. Okay, there you go. 975, huh? Well, that's not exactly like the clear level break setup that I was maybe hoping to see, but maybe you'll see it through 29.5. It's possible. Okay. And what's the S&P 500 doing here? It's still off. Got about 3 minutes before they start. Maybe I need to go get a utility that will make some sounds for me at specified times. Or maybe just make one in NinjaTrader. Okay. 7 hit into 29.5. That was probably a stop. The volume in the E-mini looks good for further upside, but we'll see if that changes when the S&P 500 opens here. Okay. That was a good take at 29.5. Wow. So I'm continually surprised by when we trade. So like 29.5 just like only barely got taken, right? We already have almost 4,000 contracts traded at it. So it seems like there's a lot of trade coming through here. Also seems like we're going to continue getting these pullbacks because this is like a more aggressive trend. It's a more persistent trend than usual, and it's kind of fighting its impact. So it kind of keeps gaps can't kind of keep opening below it, making it a little choppy there. But I do very much wish that I had taken it. Like maybe I couldn't have gotten 15. I mean, I could have gotten 15, but maybe I could have sold 14.5 because I think that I was being a little bit too much wait and see-ish about it. Like overall, I wanted to buy bonds, sell yields. And I kind of thought that it would happen sometime around 7:15. I should have just, once we were at that point, I should have just taken the best price I could have gotten instead of waiting to see a little bit more coming in. Is this a counter trend trade to hold in the 10-year? I do. So listen, this is a huge speculative bet here on my CTA account, but you can see here that I've been going long the treasury. Even though it's below my average position, I'm still in the money. So the call that I'm making there is that the market is not, there's no reason at the moment to see an increase in interest rate expectations. Like the market is just freaking out because we just had the Federal Reserve meeting last week. So, it's on everybody's mind, but I'm not actually seeing another change. Like there was the change that we saw before was when they said, oh, like 25 basis points per meeting isn't enough. So now we're going to do fit. That was the big change. All right. But I don't see any reason for a change after that. And in fact, going to 75 basis point hikes, they've clearly rejected that. So based on that, I think that makes this a good tactical location to see a rally in the bonds. That could also mean a rally in equities. So even though I don't actively trade equities, right? I do have my retirement accounts, and I've had a lot of cash in my retirement accounts because I didn't like the bubble that we were having. And I'm starting to see some opportunities. I see Warren Buffett making some moves and making a lot of the moves that I wanted to make. So I just bought some Berkshire Hathaway. This is what I did. So I put a little bit of capital to work there, but not everything. I kind of held some back, thinking, well, if I'm wrong, this could continue until October. So then I would want to put some more money to work in the summer, at the end of the summer. We'll see. The one thing I am worried about is Japan selling. That's a wild card. I don't think anyone understands how it will affect. Yeah, well, and you're totally right. And we can't really see that flow right real time. Like we can't see that it's Japan that's doing it. All we can do is kind of look at oh man, by the way, natural gas is just falling hard here. It's down a whole $1.50 now. But all we can do is see the yen correlation. Yen's not moving a whole lot at the moment, but that probably could be it could be the case. Like seriously, actually, I think this is. I'm glad you pointed that out because it's something that I kind of forget. But I think that part of the calculation here is that some people think that the bond market is freaking out because of what the Federal Reserve is doing. And the reality could be that the bond market is freaking out because of the difference in policy between Japan and the US, making it so that they can't hold their hedges anymore. And that's what's pushing it up. And so you get a situation where the larger market is likely to misread what the market is actually trying to tell them, leading to equities being more bearish than they should be, right? But the flip side of that, the bearish thesis and the equities here, something that I am very much saying and concerns me is that big tech companies are scaling back. Big tech companies are scaling back and sizing down again. So that's not good. That kind of suggests that we may start seeing some weakness in the labor market. Up until now, the labor market has been really, really hard, but we may be seeing a situation where the inflation is impacting consumer expectations and everything else, and that it's starting to hamper the labor market. And that's when we tend to fall into recession, right? With the yields on JGB going up, does Japan sell 10 years? Well, I think that what the main thing that's happening here is the Japanese yen itself. So when the Japanese yen gets crushed, their currency becomes so weak, and all of the people that are coming over here and buying like US equities and stuff like that, they have to hedge their currency exposure. And we're basically to a point where it's too expensive for them to hedge that exposure. And so they just have to drop the positions. And so that's why you're seeing a lot of these pension funds from Japan sell. And how much more of that we could see, who knows? I have to say though, this move here today in the Treasury is not indicative of like one big block order being executed. It seems much more a market-wide systemic kind of bubble up sort of a move. That could just be because of short covering or whatever, but it hasn't done the sort of big move up, goes sideways, big move, it's just been very persistent bubble up. So that's another thing to keep in mind. Like we're reading the order flow. Can we gather something from what we're seeing in the order flow, wow, 2,000 bid at 29 when we ticked up, huh? Well, what I'm seeing in the order flow doesn't necessarily suggest one big player or anything like that. It kind of suggests a market-wide systemic thing. So what could be causing that? Well, there could be something going on that we don't know about. But the most likely thing that I see here is like short covering, or maybe just tactical going along the treasuries here for the reasons that I stated earlier. Man, those bids. Do you see this? So somebody has definitely decided to get involved in the market here, starting at about 29. And they're starting to market make on the bid. So when we get this sort of a thing, this can be indicative of strong trends. Yeah. When all of a sudden it's starting to stack on every tick up, that means that somebody has come into this market. We should be careful. I hesitate to say that is like a buy signal per se, but that is a very, very strong change in the liquidity in the order book for something that, you know, we've been having a hard time getting even 1,000 contracts on a day, and now all of a sudden they're putting 2,000 bids up there. Wow. And he ticks it up again and moves his two bids together and bids 4K at 31. Yeah, I love it when that happens and it's on your side. Well, it looks like they're really likely to get into the 118 even area. I wonder if he's holding that because there seems to be some people selling here. And he seems to be doing that to say, go ahead and sell all you want. I want all of it. Right? I don't think that you show that big of an order. So sometimes you show a big order like that because you're trying to move the market, right? Well, then they just executed it. This guy wants it. This guy wants it. It's not just spoofing. In fact, he pulled the order and then put it back in there to try and get people to sell into him, and they sold into him, and then he put even more up. Yeah, that is really strong reloading. I've not seen reloading like that in forever. You know, like the level break setup looks like, you know, one of my favorite things. A level break setup with 8K at the high. Woo! Yeah, and they just slammed them at 31.5 and 118 even. I'm surprised that the 30-year is not keeping up as much. For what just happened there. For what just happened there, we're not getting paid very much for it, are we? Yeah, it really has been a while since we've seen the setup like that. That was like the sort of thing that happened maybe back in like 2016, 2017 sort of times. Now they did fill him. There's still a big bid out there, but it's at 30. ES had some absorption too. Okay. Well, so far the S&P 500 has kind of been, they didn't make a really strong move on the beginning, but it does look like the volume is pushing up in the S&P 500. And see, so they're still hitting them at 30.5, and they're still taking on a lot of contracts. So basically, we just saw a swing of about 10,000 contracts short in this location. So we got to be careful because that could mean it really is a large buyer there that is willing to eat all the contracts up, and they're willing to hit him, and eventually they might push through him. But they could continue pushing this up, and if they do continue to push this up, there's a bunch of people that just sold into that guy that are going to have to cover those positions, I think. Yeah. Well, that wasn't too inspiring there. Them taking 30 half again, and 30 half kind of starting to show. Okay, so I see. So we're starting to get the whole um, order book is strained here. Like the market makers, too many positions filled in this location and low latent liquidity between 30 half and 31. Okay, they hit 30 as well. Man, I- I have to say that's an aggressive seller. Like I'm surprised that the buyer, played it that way. And already pulling back. Now, part of that may be like spreads and so forth, because again, the 30 year did not really push up the way that the 10-year did. I don't know. They're already kind of giving me hints that was like the top. You think so? I don't know. Well, I suppose we couldn't be, you know, we should maybe see them try and pressure that buyer, and then maybe in the end he wins, and it could be a much later. But yeah, it was a nice run. Either way, it was an exciting trade to watch, wasn't it? That alone, though, regardless of what happens here intraday, I think what we just saw there is a good sign for the markets in general. Like seeing somebody come in and put some actual liquidity in the market is a really huge change from the last man, like the last 5 months, right? Okay. So maybe they're looking like, well, we'll see. So I think the thing that we need to watch in this situation is large meta order sell pushing against this and undoing all the work that they had. Otherwise, their tendency should be to you know get sucked back into 31 where all of the transactions happened. S&P 500, though, like I said, the volume is overall net buy in the S&P 500 since the open, but they are being tested on the downside at the moment. And there's 29.5. So 29.5 was where they things kind of started to show up, wasn't it? So that means they're pressuring the buyer. No, they're pushing them even further on the downside in the S&P 500. What was that? So the 30 year is ticking up there. So are we seeing some change in the spreads? That's a little odd, but maybe the 5 and the 10 catch up here. But do you see that the 30 year just rose up almost to its high? There it was just like 3 quick ticks and they were there. The 10 year still kind of chilling down here. The Japanese yen actually pushing lower here in the last 5 minutes. Gold was starting to see a recovery, but they are giving up a lot of those recovery gains. May look like a bull flag. Yeah, it could be. I've seen this sort of thing before where so this is a really great example of where 3 years ago I would have misinterpreted the order flow because I would have seen those strong bids and everything and said, "Oh yeah, they're going to push this super far today." Right? And so I would get in at exactly that spot and then be frustrated when they started pressuring the buyer, right? But today, because we understand the empirical properties of the market a little bit better, we understand that large number of transactions happening at 31 creates an area of low latent liquidity that can make it more difficult for them to get away from 31. And so, them coming back into this area, we do have to be careful about a large meta order going the other way. But otherwise, the tendency is going to be to get drawn back to the price. And this is where, probably market profile people would probably make that call correctly, but they might not completely understand the situation, right? They might, how do they know that it's not going to just bust through 118 even? Well, I think that seeing that liquidity stack in that manner does make us more likely to see a trend up day than not. But it remains to be seen whether that will actually happen. The 30 year, though, is pushing even further. The 30 year is making new highs there, even as the 5 and 10 lag. So we're getting a very strong steepener of sorts. Although, again, the spread hasn't changed that much. It could just be a play that on any kind of bond recovery, you should see it stronger in the 30 year because the 30 year got hit harder on the way down. So you wouldn't actually see them actively trading the spread so much as just really pushing the 30. It could also be push and pull though. USD JPY. Yeah, I look at it as the 6J. 6J, then you see, man, Japanese yen has been getting destroyed, right? But there's a lot of correlation between those two. It's stuff. I think there's a lot more whipsawing on the book when you were seeing counter trend flow. Yeah. Yeah, I think you might be right here, about that, Mr. Bond. Well, because the thing is when it's like a one guy, executing a huge block order, I think you're much more likely to see strong, consistent trend pullback, strong, consistent trend pullback. When it's like short covering or just like, everybody in the market for whatever reason has to be going the same way, is where I think you kind of get this a little bit more trendy sort of behavior because they don't know what to do about it, like they're like we were way back here where it's like, well, I think I need to buy, but I don't, maybe I can get a good price. Oh no, I lost it. I have to hit into it. And if they're short covering and every bit that it goes up, they're giving up profits or something like that, right? So I think we will see these orders at 118 even get filled. But then from there, I'm not as sure what happens. When we come over to the volume profile, you can kind of see how we're already to an area where there was a lot of activity on Friday. So anything above 118 is kind of starting to push where the bears took control on Friday. I don't know if what happened on Friday is really relevant anymore, but you'd have to think anybody that held a position over the weekend like that would be, I don't know, wouldn't want to just bail on their position come Monday. Okay. Bank of England, Saunders is still speaking, by the way. Should also note that in Bitcoin, there was on the open. There does actually, I'd say it's still going on. There does appear to be some attempt to stem the bleeding in Bitcoin at 3,300. Okay, so there's still a stack at 30. Some icebergs on the bid, but only 991 at 118 even. You think there's a better chance we test that range high from Thursday and Friday? By the way, remind me again what your name was before, Mr. Bond. You told me the other day, didn't you? Not 31 kills offer. Oh, we got wholesale inventories at the top of the hour. What are we looking for? Wholesale inventories. So we're looking for a reading of 2.3 with a previous month reading of 2.3. Oh, Alex S. Yes. Okay. I was thinking, by the way, I haven't seen Uzi in a few days. Last we checked in with him, last time he checked in with us, rather, he was redoing his office and setting the computer up and down every day. I'm guessing that the office must have started to take longer than he expected because. Okay, there's 31.5 bid. Given the current balance, it'd be hard to get many people to buy at 118 even, so we may have to wait a little bit longer. I think that 5-year might need to tick up first before they can build up a strong enough bid to convince people to buy 118 even. Right? Because otherwise, why buy 118 when you can probably buy 31.5 right now, like that? Right? Man, it was 41,000 contracts at 117.31. Okay. Wow. S&P 500 still kind of struggling here, isn't it? It's net buying. It's actually really, really strong looking buying in the futures, but they're not really getting a very strong trend to develop yet. I think they'll feel that's looking a little better. Well, you know what else? We should come over here into our volume profile chart on in ZN and just make a note right here, drawing tools event. Oh, by the way, what day was the FOMC? It was this one. Do that one. Okay, we are gonna have some data here. Probably some other news events from way back that I didn't keep track of, but okay. So you got a good bid there now at 31.5. Not a whole lot of volume hitting 118 even yet, though, as the 5-year is still kind of lagging. So we do appear to be seeing some degree of flattening coming into the market, erasing the strong steepening that we saw last week. But the big order at 118 even yet to be filled. Okay. Wholesale inventory is coming out here, and those numbers are all in line. S&P 500 selling. I don't know if that's related to the news or just them doing their thing. Okay. So he's filled the number of contracts, matched the large order almost exactly, and they take another tick up at 118.00 half. I'm starting to wonder if this is not something that we could hold for the long term. What do you think? Oh, I need to change my screen here. And especially now that we're above 118, remember that there's like 43,000 contracts that traded way back there, right? I think that there could still be another 5 to 10K here or so to puke. This is a good This ended up being a good setup, man. Very encouraging. Still see some difficulty in the trend, like, being a little bit choppy and having pockets below them. So you see like the 5 year is dragging. The 5 year has kind of been the leader in the past. Now it's starting to lag. And well, in that situation, now the 10 year is leading, and both of these two have come back a little bit, right? But that's probably because the 10 year, there is some big imbalances here. This is some of the most fun. I don't think that I'm being pretty calm and chill about it. But now I part of this is because I got a good winner on it, right? But this is the most fun I have had in the 10 year in a long time. I mean, there's just some of the most interesting flow, and it wasn't just interesting flow; like it really came through in a powerful way, pushing higher above 118. That was really satisfying to watch. And I also think that I'm excited about it because I believe that this portends good things for the future in the markets after the liquidity being just so dismal the last few months. First glimmer of hope that maybe some liquidity is coming back into the markets and that we could stabilize here is very encouraging to see. But that all of that activity makes really does make me wonder if they are not making a longer term play. Yeah. Randy agrees, Octavius agrees. Or is somebody coming in and making a longer play on this is as far as interest rates go? And when you look at the 10 year, okay, below us is 3. That's awfully far away. But you have to wonder if that's not where they're headed. Because there has definitely been some buyers with interest rates above 3%. That could be part of what's coming in here as well. Maybe that's it, in fact. The thing that we've got to be careful about here though is that all of that volume down there means that if there's a big buyer, he got filled. I'm pretty sure that he got filled. Now, you're gonna want to try and push it up to the high to try and get those guys to puke and see it come through. Now that that's happened, what's the next catalyst, right? Or is it that we balance around 118 even? You think that ES is building a base for a move higher? Well, I wonder, something that's been happening a lot in the S&P 500 though is that the opening action, it used to be S&P 500 would open, there'd maybe be a head fake move at the beginning, and then they would pick a trend and they'd make a pretty good trend move, and then that was, that set the tone for the day, right? But over the past week or two, it's kind of been more like they fight and fight and fight until the European session closes, and then maybe you actually get some sort of a move, right? The problem is the cumulative delta for the pit session. Well, there could still be some positive delta to come through here, but it does look like that there was a lot of puking there on that last move above 118 even. The liquidity on the inside is still going okay. I don't know, guys. When I watch this, because I guess I don't know if this is really something I'm hold overnight. I'm not sure if this is a trade that I could hold overnight in the treasury, but there could be a, you know, another move more around 838 45. Like we may be in the point where they're going to develop more of a profile around 118, and then we'll see if there's another leg to this. I don't know. S&P 500 still just not too encouraging, is it? What else are we seeing here? I've kind of been looking over here through Twitter to see if there's anything extra, but Bitfinex. I enjoy reading the Bitfinex account, but you know what? It seems to me that Bitfinex was a guy that came in and was trying to run the racket in Bitcoin and failed, and now kind of has an axe to grind against the rest of the industry because he got caught, and he thinks that they should be too. Maybe to some extent, it's because he reformed, but you can just see like he's super happy that Bitcoin is down today, right? He's not objective at all. Look at that. Push higher, this time led by the 5-year. So steepening, coming back in. And that was a really strong push into new heights. Like here when I'm saying, well, maybe we have to wait until 838.45, and then they pushed through again. So it is not becoming more organized. They continue to be impulsive and just push and push and push and push. Good for our position, but are you ready to defend Elon's life from Hillary Clinton? I think people will get over it. If this was a horse rate, the T-Notes will win today. Did you guys watch the Kentucky Derby thing? Look, I'm not super into horse racing, but somebody suggested I read a book about horse racing because it could be useful for day trading. And I thought it was a good book, and I learned a lot about horse racing that I thought was really interesting. But that was such an exciting race. This guy, it was like one of the biggest long shots. And coming around like the last turn, this horse just plows out of nowhere and comes and wins it. Was a crazy. I don't think it gets more exciting than that in horse racing. You haven't watched that, you should go and find the gif of that or whatever it is. It was something to watch. Okay, so that was a strong push, but they're getting sucked back. Hopefully they hold above 01, but we'll see. There's that 118 hole may still have a little bit of gravity to it. You have one contract in ZF? Okay, well. Earlier we were talking about oil. The spot that we were saying, hey, that should be a good buy, they ended up moving lower, but they are now maybe gaining some support again and are testing that same area again. So oil largely down on the day, but maybe about to push up. S&P 500 testing lows again, regular session lows, not overnight session lows. Overnight session lows are back at 40.30. Yeah, that was kind of a little bit of what I was worried about, is that, you could touch 118 again. And what about timing here? Well, let's say that the last leg of the meta order came through at the top of the hour. Okay, so did you see that there was a decent amount of liquidity offered and bid at 118, and now there's an iceberg at 31.5. So there might actually still be gravity at 31 even. But at that price, I didn't actually get the low resting liquidity kind of signs that I was perhaps looking for. Wow, yeah, it's coming back quite aggressively. That push higher might have been market makers puking. So there may not be another leg to this, right? That might be done. Well, I'm mad. I wouldn't have minded getting out at 21, or sorry, 3.115. We could panic and ditch it at 3.125, or could hold on and let it all come back. Oh no, I'm unhappy. Crack my knuckles there. S&P 500. They caught a little bit of a bid and they're already turning. They gonna push new lows, or are they gonna break the ATR stop on the upside at 40.60? $40.16? You guys are calling out interesting prices, but I don't know where the options gamma is at this point to really make any kind of calls like that, I suppose. what I'm seeing here in the treasuries is that was a significant pullback. I think that there could likely be another, they'll get sucked back into the 118 even, but I'm not so sure. Like 31 was kind of the place, right? Yeah, see, now 31 is kind of giving us the hint. We didn't see it at 118 even, we're seeing it at 31. I will take my exit. I'm a little frustrated at how much it came back because I had 27 MFEs, so it came back more than half, and that was awfully quick too, right? I think I should have been a bit more on my toes there. Also, a chance that they're going to float back up to the highs and maybe even a continuation of the trend. But I think that for my own mental health, that coming out and making sure that I get at least the $10 on this is what I should be doing. I don't want to see something like that come all the way back and not catch any profit on it at all. Really should have been trailing that a little bit more hard and taking the $20. But no, I don't think that would work because this market is too volatile for a stop for a trailing stop that close. Nope. What do you guys think? Treasury's done? Done for the day or more to come? Let's see if you think I'm crazy or not. I will ask your community. Good job, thanks. Was that even though I didn't manage the exit as well as I should have, it was a really good read. It was an exciting move. And I think that we understood what was going on really well. So, yep. Hey, by the way, before you go, Oliver, make sure you come back in an hour, check out the video that we're posting today, or then that you're subscribed and everything. LAFTA thinks more to come. 3 votes so far. I don't know. It looks like we just gave up a little bit more. So if I had stayed in that, I would be like really unhappy right now. Yep. Hey, thanks for stopping by, man. And change the title of this stream to Liquidity Improves ? Yeah, see, them testing 30, that's not what I want to see. What it's suggesting to me was that last move up was indeed people stopping out of their trade, and now it's done. I think I should have been more cautious about that. Like when you're seeing stops like that. Good job calling the price action. Maybe tomorrow you can call it like it's the Derby, right? I don't know if I'd ever. I think it would be fun to try. I think that you'd have to practice it a lot, trying to call fast sports action like that. Like, especially the guy that calls the Derby. So there's so much going on, right? Because I would be watching that and, oh, this horse comes out of nowhere at the very end. What horse is that? Wait, what? Like that, the guy that calls that, because that was the longest shot. Like he really has to know a lot about horse racing, right? He knows the name of every horse in that race and everything about that. This is what I love about the world. Like this is the sort of thing that keeps me going. Sometimes I just get super bored. Yeah, big iceberg at 29. Sometimes I just, because I'm a little ADHD and you got to have variety, right? But there's so much variety. Like think about it. As much as we know about the financial markets, as much as there is to know about the financial market, there's almost just as much to know about horse racing in some respects, right? Like there's this whole world about betting on horses that's very, very similar, very, very similar to the financial markets. I mean, maybe it's not as large because, there's so many different types of financial instruments and so forth, but there's just this whole world about horses that for some people it's their whole life. They spend all their time researching about these horses. You think that we will bounce here and continue? Okay. Well, I think that it's not unreasonable. I think that I'm getting out more for me. Like for me, I really making that $30 would have really improved my confidence because I had some trouble last week, right? I lost about $100 last week. So, if I had been able to get $30 of that today, that would have been amazing. But I didn't. It came back on me a lot. But when I come into my stats and I look at it, it seems to me that what I get is not what the MFE is. The MFE is quite a bit further than what I should actually be getting in some cases. So we've got to work on that. But, if I had given it all up, that would have been so discouraging. And I took it at 13.5, 13.4. So basically I would be stopping out at break even right now, right? But if this 31 is indeed a low resting liquidity node, given the amount of trend that we've had in the market today, it wouldn't be surprising to see that the hole is actually like this. And so this could be the extent of it, and maybe you could start leaning on the VWAP here at 28.5 perhaps, or some of these icebergs in this location. Yeah, and money like my mother-in-law. Well, that's the other thing is the people in the horse racing world, they got money. But that's just the thing. There's so many things in the world to know, you would never get to the end of it. And it's really cool to just go into those other worlds, learn a little bit about it, get into it because it's a new and exciting thing for like a week, but not actually have any plans. I think that's the thing that ADHD people do, is they'll binge on that one thing for a little bit. They get super into it. They buy all of this stuff. Then they forget about it. They get bored of it, right? But I think I'm to the point where I consciously understand that that's what's going on, is that I like the variety. So I just dive into the thing and what I just say, but we're not actually going to do that thing, right? Our focus is what? Trading. So we're going to stick with trading and software development and the YouTube channel. And we don't have any room for other things, but we can act like we're going to get into that other thing for a week to get the dopamine going. Okay, so now we got 9 votes. It's pretty even, but it does look like you guys are coming down on the side of that there will be more trend in this. You may be right, but if there is going to be another leg, I think we still got a good 15 minutes to see this the liquidity recover a little bit before they might try buying. You know, if you're a large buyer, large mid order buyer, you got to be pretty happy with how this is going right now, and you've got plenty of liquidity to try and buy up again. But I do think we have to wonder if that wasn't all there was. And it may be the case that the attention could turn to other parts of the market. Well, there was a good tick up there, so they might be turning. Let's reset the DOM here so we can kind of keep track of this and see if they come back, right? I don't like taking like trades every swing. I think that I made money and I should probably relax a little bit now. But this could be, if we think there's more to come, this 29.5 is probably the place to do it, right? Now on the split side, do you really buy that much there with the intention of, I don't know. I mean, they bought a lot there and then it went the other way over there. That could just be the market makers doing their thing, and maybe the trade is already done, but I feel like that there must be a chance that somebody now has a really big position that they're planning on holding long term. I know a lot of people in the horse racing game: owners, trainers, riders, exercise riders, feeders, and some made a fortune, but most lose. Still keep in contact with some. That's interesting. Maybe if I lived somewhere else, maybe if I lived somewhere else, I could get enough into horse racing to like actually go to the horse racing track or something. But Utah's not the place to do it, unfortunately. Although, you know what's another thing that I think I need to get into more? This should be the thing that I binge on this week is Formula One racing. Do any of you guys into Formula One racing? Because what I'm hearing, and maybe this is all just marketing, but what I'm hearing is Americans are finally warming up to Formula One racing. And the news that they're going to be turning the Las Vegas Strip into an F1 circuit, that just sounds so effing cool to me, man. That is going to be the coolest racetrack. And that's close to me. I could go and watch that. And I think, when is that? That's like next year, right? Let's see here. F1 Las Vegas date. November. Formula One will return. Wait, why does it say return? Won't that be the first time? Okay, the inaugural Las Vegas Grand Prix will be taking place in November of 2023, although no precise details. I think we should go and take the Asher with us. When Michael Schumacher drove against Damon Hill, that was the last race I saw. I don't know who these people are. Don't they use that name in one of the Cars movies, though? Dude, I bet you that my son would be pumped to see an F1 car live. My friend's brother-in-law trained secretary. I was talking. Wow, really? It's amazing. There's another thing that's so cool is like, there's so many different ways to make money. We're giving away our age. Listen, I know that we're all old here. Like, this is one of the funny things is that I'm like one of the younger people here on the channel, right? So usually the opposite for most streamers. Man, it's something that I find kind of interesting is to see like there are so many millennials that stream and are on TikTok, and it's like with TikTok is interesting. Well, maybe it's not interesting in this respect. Maybe that's just the way that it tends to go. But you know, TikTok very much started as Gen Z, and a lot of people dismissed it because it was just like a lip syncing and dancing app, right? And then millennials came in and you know, of course, we get in our bubble, so it's kind of hard to know for sure what the demographics are and everything. But there are some very, very successful millennials on TikTok, and so now the Gen Z and the millennials are kind of intermingling in curious ways. In the beginning, it kind of seemed like, oh, millennials suck. They're responsible for everything. But now I think that they're all kind of realizing that, oh no, like millennials have been the primary victims of the, you know, kind of the trends in our society for the last 20 years, and they've experienced probably more pain than Gen Z has in this respect. But I don't know. Maybe this bear market goes further and it really, really destroys Gen Z, and I hope not. Look at that action right there in the 10-year, recovering 30. That's, you know, I think that they'll probably be able to touch 31 again. We'll see if they can touch 118 again. That well could be, but that's enough of a pullback in a treasury that, listen, treasuries really like to trend, and they tend to be very consistent where it's like, you know, you'll get like 8 ticks up and 4 ticks back, and it will do that sort of oscillation back and forth a lot. So to see it coming back that much, you really do have to question if we've already touched the high. Do you think the housing market is in a bubble currently? It definitely was. How much of a bubble is left, I'm not sure. But the bigger problem is that the longer term fundamentals in the housing market still look very positive for housing prices, right? There's going to be some people that bought the highs of this and are going to be stuck in those homes and stuff for a while. But I'm going to bet that if they stay in the home for 7 years, like people tend to, that they will get they'll at least be able to break even on their houses, right? So the bigger problem is still that we just don't buy enough houses. Like after the 2008 crisis, the builders just all went kaput and they didn't come back. And then COVID didn't help, right? They limited a lot of construction during COVID. Who wants to go and build houses right now? Like a lot of the people that were in those trades and things like that just moved on to other things. Yeah, we need to, you know, at some point, I think that the government is going to have to figure this out and start going, oh yeah, like we need to do things to give people incentives to actually build. Someday, this is going to be the funny thing, is that someday there's going to be a housing builder bubble, right? The government is going to step in, and there's going to be these people that make fortunes building houses. And then we finally get back to an area where, you know, like we've built enough houses and like that market collapses or something. I think something like that could potentially happen. Yeah. So if you are a millennial or even Gen Z, if you're that far along and, you know, you're looking to buy a house, you know, don't pay more than the house is worth. Okay. But I wouldn't sit back and say, oh yeah, like if I just wait another year, housing prices will be way lower. That may not be the case, right? Because there's a strong scenario here where the market stabilizes here. We're already past peak inflation, and interest rates are able to sit around this neutral area for a long time. And, you know, and if not, go back into a deflationary environment, and housing prices will remain stubbornly high. and continued to rise because of the lack of supply. Well, I definitely could have gotten some better prices, right? So I got out of my trade at 124. Okay, so this is right about where we were. I'm not going to get back in, but is there a possibility that we go back to the lows? Yeah. Although I'm a little bit more skeptical. I'm to the point like the chances of that happening are enough that I don't think I'm willing to put risk on it. Maybe if I had made the $30 and it had come back and I was catching like 13 again, maybe it would have been worth the risk, right? But at that point, I would maybe be thinking about taking it off here at 120 or 115. Sorry, 3.115. I don't know what's the best way to say these prices, but it makes sense to you guys. But I'm thinking that I wouldn't be pushing it super hard, expecting a strong trend, because it's significantly less likely. Still very possible, but significantly less likely than it was. Especially since this 118 is going to be a big price. It's going to have a lot of gravity to it, right? Now, if I had not gotten out where I was and I let it come all the way back to break even, I would be, no, actually, I would be at $20 right now. So maybe that would be a good place to get out. But I'm wondering if my psychology would be like, let's push it and see us make $50 on this. Let's see. Think house prices will fall in the long run because of demographics, because we're not making enough babies. That might be something 50 years from now, but I don't know, man. I don't know if the demographics are such a big deal if Biden rescinds Title 15 or whatever the number is that they got for that, and people start flooding across the border again. Okay, there's bid at 118. 118 still not kind of showing those hints when we cross against it. It seems to be going through that price when we do that. So that's kind of like maybe a support and resistance area of sorts. I don't know. Looks like maybe I should have held it or gotten back in, huh? Sits, well, yeah, it came back up real fast. Came up really, really fast. It's only been like the last 10 minutes. You can look at Japan and the impact of an old society. Well, yeah, but like Japan would be a great example though with housing, right? They didn't have the same kind of problem with housing in Japan because they basically said we're not going to have any kind of zoning rules and you can just build whatever you want wherever you want. And so housing in Japan is quite cheap. And you know what? I actually like it kind of sucks to say it, but you look at the way housing is in Japan. That's probably the way that it's going to go in the United States. Seth, you're smart, and most all you share is true about trading. Well, I appreciate it. I mean, I work very, very hard that when I'm trying to like say I'm like actively teaching something, that the thing that I'm teaching is something that I can prove and verify is a thing. But what we say about the action and our opinions on about the markets, we're wrong all the time, right? And my trading isn't always the best. Last week was really bad. Still feel bad about it. Anyways, one of the things that we don't talk about in the United States enough is that houses are a lot larger than they used to be. Like they're like 40-50% larger than they were back in the day. And so we complained about how big the houses are. Well, all a part of that is because we're just building more expensive houses, right? So in Japan, there's lots of houses that are teeny tiny houses, Like the kitchen is tiny and the rooms aren't very big, and there's I wouldn't be surprised to see a lot of that start to happen in the United States, where they start building houses, but they start building lots of smaller houses with like hardly any yard to them. Well, what do we think here? I think that it's not a given that we break a new high. It sure is looking encouraging, I must say. There's been about 5,000 net contracts long cumulative delta here in ZN, and that's not that strong compared to the former action. So it looks like that the Treasury is trending up more so in correlated with the 6J rather than with the volume in the Treasury. So that kind of gives me a situation where it's hard for me to really know if they're going to push up higher or not. We also do appear to still have, they like these prices over here, right? But we've got the timing is right, so they could totally make another push higher. You have tiny houses built with containers now. Yeah, I think like maybe you'll see more of that sort of a thing, right? Like almost like trailer parks, but not so trashy. or apartments, or just apartments. Because the other thing that you'll start to see happen is that because people can't get houses, you have more people stuck in renting, and there's not enough renting, and so they'll have to build more consolidated renting units. Or you'll get units that are like an apartment, but you can actually own it. You'll see more of that. I mean, you see that in the inner city. Like if you're like downtown, then there's places like that where you can buy a condo, right? But maybe that will become more common as well. That could be a way to kind of get more people being able to buy, because it's not a good thing for people talk about buying a house is not a very good investment. I don't think that that's actually strictly true, because you're building equity in your house, and building the equity in your house is a lot better than it just going into a black hole like it does with renting. And yeah, I don't know. Like I can see their argument with the quantitatively maybe it's not worth as much anymore, but I think that you still want to have something to your name, right? And it's not good to have this large swath of people that they're paying a ton of money for their living expenses, and then they're not building any equity from it. That's not good. Well, man, I guess that trade came all the way back to my entry, but they are indeed pushing lower. I think that when I said I could take it right here back again, but I'm not going to, that would have been a good trade. And that is one tick higher in the 10-year. And I think that it was at 3.105 was where I was like, I would really like to take it off there. But if I was still headed on, would I be taking it off there? I don't think so. I think that I would be getting greedy here. Well, I think that answers our poll. So how did we end up? It was 50-50 after 10 votes. It was a tough call, really, isn't it? But you know what? I don't think that this was this continuation that we've had. I think that we were taking it from, this seems like a really strong trend. Do we think that there's more to the meta order? And we think that there could be. But I'm not entirely sure that that's why we broke new highs. It looks to me like we broke new highs in part because of the Japanese yen, right? and that could come back on us at any second without warning. So it wasn't, if we had caught that and made money off of that, I think that that would have been a little bit more luck rather than our ability to understand what's going on in the market. There's always some luck to it. There was some luck to the first trade that we took because I didn't really get very good prices, right? Yeah, it was like a VWAP bounce, wasn't it? Well, they went a little bit through the VWAP because they got all the way back to 28, but you know what though? I don't really think that that there's anything special about the VWAP. It's just that when you get a trend, it's the square root law. It'll come back like this, and like that's going to be the average. And what we get is, and then it goes too far, and then it comes like this, right? But what we're getting right now is more like right? So you might see this sort of thing happen, right? Where they come back really excessively again. Like they could come back to 118 even. Possible still. Given the liquidity circumstances, I would not discount their ability to come back and touch 118 even. But that's a pretty strong upside move. Oh yeah, okay. So Octavia is pointing out to us here in Discord that there is a pretty big order up here at 112.16 3/4. Yeah. I don't know. I have mixed feelings about this action today now because of all of that. Because I feel like I could have made so much more than I did. I'm a little miffed about that, but I think that what I'm doing is I'm letting myself feel the FOMO, right? So I don't think that this leg higher was a trade that I really had a good enough read on to have made a trade on it. So I think that the mistake that I made was not taking it off on the first one when we had that really excessive blow off top. That excessive blow off top really should have been a warning to me that you need to start thinking about taking profits. And then when it started coming back so aggressively, I could have taken it off at 3.115 or whatever and made $20, $25. No, because 105 would have been 30, so it would have been 20. Yeah. Because this was 11. Well, so you can kind of, in fact, see exactly what I was hypothesizing about. They're already pulling back quite aggressively. 118 seems really far back there, but it's possible they touched that. Although there was like a floor at 118.00 so. You think Globex low could hit more stops? Possible. So here's another scenario that we haven't talked about that's possible, which is past inflation is already past us, but we are also in an active recession. And so the Federal Reserve may have to pull back on further interest rate hikes, even before the end of the summer. Wouldn't that be something? In that situation, though, what's the play? Buy bonds, right? Oh, yeah. That's going to be a crazy good opportunity to buy bonds if that's what's going to happen. That one's actually maybe a stronger possibility. That's maybe one of the strongest possibilities right now. Probably right behind we're not in a recession, but just a healthy pullback. I don't know if you can call this a healthy pullback. This is a bear market. It might be a short bear market, but this is a bear market. We could even say like okay, less than 20% decline. So that's still a pullback, but I think that from the perspective of a trader, this is a bear market. Yeah. Well, I think that our whole long trade in MES, like we've held it for a really long time, right? And it just didn't work out. Um, I think that if I held this, that there's a good chance that it will come back, but I don't know if we'll actually make money on it. Like they might just come back to our entry. So let's puke that. Was more the experimental account anyways, so. And what do we do here? You know what's going to kill me is that if this trend in the treasury continues all the way back to 3%, then I'm really going to be kicking myself, right? How many tick stop loss you use? Today I'm trying to trade bond, but I don't know where to put the stop loss and profit. Oh yeah. Okay, so well, it changes. So I think what you'll notice is that here in the micros, I do things in like increments of 5. When I'm doing them in the treasuries, I usually do them in increments of 4. But, so I'm more interested in at certain prices doing things. Okay. But like it kind of adjusts with the market. Like in this particular situation, I made 30 ticks. It came back. I got out when it came back, but in the end, that came back 30 ticks, right? $30. So how big of a stop do you really need if you're going to sit through an entire pullback, right? It's a lot. It's a lot, relatively speaking, for the treasury. So I think that you have to kind of approach it with more of a, well, with the way that we trade. Like, here's the thing: most people, they want to go in and try and use technical analysis and all that sort of stuff. That's not what we're doing. What we're doing is we're trying to front run block orders. So I come in on the day with the opinion that it's going to be a net buy day, and I can see that the trend already is net buy. So I'm looking to get the best position that I can in a buy. Now, at what point does it become clear that maybe that's not going to happen, right? So I'm looking at it more of what is enough volume going the other way for me to say I'm wrong, and that's where I stop out. Right. So let's say that I thought that this was as far as it was going to go, and it was a reversal, right? And we're looking at the treasury here down here in the bottom, right? So as soon as this happens right here, that's kind of like maybe you're wrong. They're crossing a key market maker position right there, right? So now you can also make this other mistake, which is like, what if I think it's going to continue and I buy in here, right? And it comes down, then if it makes a lower low, then I'm probably going to get out, right? Like in that situation, it's not worth waiting for it to try and come back and get out. You probably just want to dump it because you got the trade wrong. But I would approach it more from that perspective rather than from trying to have like a set take profit and stop. So all of the research that I have seen on stops and targets suggests that they just reduce your profits in the end, right? Like the real edge is in knowing that somebody else is going to buy and how much they're going to buy, and trying to have some expectation that the market is going to move a certain amount really just causes you to overfit. Essentially, it causes you to overfit and it reduces profits. So you've really got to hone in on what is my edge that moves the market, and being able to quantify it in ways about how far my edge is going to move the market, right? in this case, it's kind of hard because I don't think the volume is what's actually moving us anymore. I think that it was the 6J. So, but typically, especially when it comes to targets, I'm looking over here at my cumulative delta and I'm saying, well, look, here we had this move down. We were negative 19,000. And at the top of this, we were negative 6,000, right? So that's like 13,000 contracts long. 10 to 15,000 contracts. That's a pretty decent swing, right? And then especially when we were getting the kind of the stop runs up here at the high, that should have been a signal to me that like, yeah, you might be done. You should probably take profits. If you want to get back in later, you can. And then we could have gotten back in later. Although I don't know if I would have. Right. That's the way that I tried to approach it. But what's the disadvantage of doing it that way? It's very discretionary and there's a lot of room for you to make mistakes. And I make a lot of mistakes quite often, right? So probably not the answer you were expecting, but I hope that helped, right? But just think of it from that perspective. Like the market is more statistically efficient than it is informationally efficient. So it's better for us to just like know what's going to happen, right? Or know what's happening. And, based on what's happening, how many orders could be coming through because of it, right? And use that as your judge. But who knows? Maybe today is a trend day. Maybe today is a trend day in the treasury and they're just going to continue going up all day and I'm going to regret taking only $10 from it. Probably what's going to happen. Thank you. Yeah. Well, thank you for asking another question because it's a good question. I've got to get going though. Get started doing real work for the week. So we did so bad. Didn't do too bad. Do you remember what you learned from your first trade? I don't remember my first trade in the market in the least bit, to be honest with you. I've become a little bit concerned about saying stay profitable, friends, because I don't want anybody to think that that's a claim of like what will happen if you watch this stream. So I'm going to say stay profitable, friends, or at least don't lose it all. All right.